Over the past 18 months, Irish savers have had it good. Deposit rates on savings products offered largely by non-Irish financial institutions have been very strong, at least when compared to the abysmal deposit rates that have historically been offered by AIB, Bank of Ireland and PTSB. At long last, Irish savers finally had access to what many would describe as a fair rate of interest on their deposits. Those who were willing to take a bet on these new foreign entrants into the Irish deposit market were handsomely rewarded. As for those who weren't willing or were unaware, well, let's just say it's been 18 months of largely the same level of deposit rate disappointment. However, the good times can't and unfortunately won't last forever. The European Central Bank has started to cut interest rates for the euro area, with the first and most recent cut equaling 0.25%. Unfortunately for depositors, there's likely more cuts to come. While it remains uncertain as to how quickly the ECB will cut rates, the general consensus is that rates will need to be significantly cut at some stage. Therefore, it's very important that you understand how these future ECB rate cuts are going to impact the rate of interest that you receive on your deposits, not just from non-Irish financial institutions, but also from the Irish banks, with whom the vast majority of Irish household deposits are held. It's also important to understand that different financial institutions are going to react differently to ECB rate cuts, which in turn can lead to a scenario where after the dust has settled, a different player becomes the new best option for depositors. In other words, ECB rate changes can result in changes in deposit rates offered to consumers by many, if not all, financial institutions, which requires you, the consumer, to reanalyze the market for the new best savings account option. So in this video, I want to take a look at how the latest ECB rate cut has already started to affect Irish depositors. I also want to talk about the financial institutions that are currently offering the best savings account options in Ireland and how these accounts will fare in the face of future ECB rate cuts. All of the sign up links to all of the accounts mentioned in this video will be in the video description and in the pinned comment in the comment section. Using these links as opposed to downloading directly from the App Store supports me as a creator and lets me know that you found this video to be useful. All sections of this video have been timestamped for your convenience. When the ECB decided to cut rates by 0.25%, many consumers received emails from online brokerages stating that the ECB had cut rates and as a result, the rate of interest earned on their uninvested cash deposits would also be declining by 0.25%. But why does this happen? The simple explanation is that when it comes to deposit rates, many financial institutions set their rate of deposit interest with reference to the ECB deposit facility. The ECB deposit facility determines the rate of interest that banks receive for depositing money with the central bank overnight. In other words, the banks could technically take your deposit and deposit it themselves with the central bank in order to earn the ECB deposit facility. Since September 2023, the ECB deposit facility had been set at 4%. That's why Trade Republic, for example, were offering 4% deposit interest to Irish savers. They were fully passing on the rate of interest earned on the ECB deposit facility to Irish consumers. But now, Irish savers have started to receive notifications that their rate of deposit interest is going down by 0.25%, and those notifications will continue to be received the further the ECB progresses with their rate cuts. It goes without saying that lower deposit interest rates equals less cash earned on your deposits with financial institutions, which is why this is so important to be aware of. Unfortunately, if you're looking for some degree of certainty over when the worst of these rate cuts will happen, then I've got some bad news for you. It is a fruitless exercise trying to make accurate predictions around when further ECB rate cuts will come and the size of those rate cuts. There's even uncertainty within the ECB itself as to what the rate cut journey will look like. In fact, it's quite common for members of the ECB Governing Council who make these decisions to disagree on what the best approach is to achieving price stability in the euro area, which is the ultimate goal of these rate changes. Therefore, the best thing that we as consumers can do is to stay agile with our analysis and decision making whenever a new rate cut comes to fruition. With that being said, let's talk about the best savings options in Ireland right now following the recent ECB rate cut and how these options will likely stack up against future rate cuts. TLDR, regardless of what happens with ECB rate cuts going forward, one can be reasonably certain that savings options like Trade Republic, Raisin Bank, Lightyear, Trading 212 and Bunq will continue to offer far greater value on deposits to Irish savers than AIB, Bank of Ireland and PTSB. That is the key takeaway. For those who were previously unaware of the alternatives or were just hesitant to get involved, just know that it's unlikely that the Irish banks will ever offer better value on deposits than what's available with these alternatives. For those who missed the boat over the past 18 months, the best time to start was yesterday, but today will do. And it's very much a case of better late than never. For those who have been availing of the alternatives, the question is whether your alternative of choice remains competitive in current market conditions, and if there's any way that you could be more optimal with the allocation of your deposits. To answer that question, let's first take a closer look at the best instant access accounts which are currently available to Irish savers. Trade Republic remains the top choice in terms of overall value to Irish savers. Despite the reduction in deposit interest rate to 3.75%, Trade Republic continues to offer the best rate available on an instant access account in Ireland. This means you can earn 3.75% interest on your deposits while your cash remains fully accessible so that it's always there when you need it. Not to mention that your cash is fully protected up to €100,000 under the deposit guarantee scheme. On top of that, Trade Republic has introduced some attractive additions to its proposition to consumers since we last covered it. Namely, Trade Republic has introduced a Visa debit card. The team actually sent me the Mirror card, which has a fully reflective surface that looks quite cool. You can get a virtual card for free, a physical classic card for a one-time payment of €5, or a physical Mirror card like I have here for a one-time payment of €50. There is no monthly subscription associated with the Trade Republic card either. The benefit of the Trade Republic card is twofold. Firstly, you'll gain access to a feature called Saveback. Essentially, 1% of your eligible Trade Republic card spending gets reinvested into a savings plan of your choice. A savings plan is Trade Republic's version of automated investing. You can earn a maximum of €15 worth of Saveback per month, which equates to a maximum eligible monthly spend of €1,500. Not necessarily the most groundbreaking amount of money in the world, but definitely better than nothing if that cash is going to be spent anyway. Spending which isn't eligible for Saveback includes cash transfers, ATM withdrawals, investments, top-ups, transactions through PayPal, gambling, and quasi-cash transactions. The main caveat here is that in order to activate Saveback, you have to set up a €50 savings plan for the next month, and in order to continue receiving Saveback, you need to invest at least €50 per month in a savings plan or plans. So a bit of a commitment there, but by no means a highly significant or binding one. The other beneficial feature of the Trade Republic card is Roundup. With Roundup, it does what it says on the tin. When you spend using the Trade Republic card, your card payment will be rounded up to the nearest euro and will be invested into a stock or ETF of your choice. You can take it a step further by applying a multiplier to the rounded up amount of 2x, 3x, 5x, or 10x. All in all, two very nice features to have in accompaniment to your deposited cash, which again is earning a market-leading rate of interest. Interestingly, Trade Republic also recently removed the €50,000 limit for earning deposit interest exclusively for its German users, and it would be amazing to see that feature make its way over to Ireland at some stage in the future. Due to the existence of the €50,000 cap on deposits eligible for interest on Trade Republic in Ireland, it is still necessary to turn to further alternatives for those savers who have deposits in excess of €50,000. Idea being that you would park a maximum of €50,000 in Trade Republic and then look elsewhere for another platform or platforms to park the excess. The two main candidates here are Trading 212 and Lightyear. As of recording this video, Trading 212 is offering 4.2% interest on Euro cash deposits via its qualifying money market fund system. Now, you might be wondering, Dan, if Trading 212 is offering 4 4.2%, then why not just go with them over Trade Republic? Reason being, with Trading 212, because your interest is being earned via an investment fund, the interest will be liable to tax at 41%, which is the current rate of tax applicable to returns from investment funds in Ireland. However, with Trade Republic, because the interest is being earned via a traditional deposit structure, deposit interest retention tax, or DIRT, of 33% will be applicable. The lower tax rate applicable to interest earned via Trade Republic outweighs the lower rate of interest offered by Trade Republic. As a result, the net after-tax return earned via Trade Republic is 1.39% higher than Trading 212 based on the interest rates and tax rates applicable at the time of making this video. Any subsequent changes to the interest rates offered by either of these platforms or the respective tax rates will of course change the net result, which is why it's so important to stay up to date with who the market leader is at any given point in time. Given that Trading 212, in lieu of protection under the deposit guarantee scheme, offers its users up to €1 million worth of free insurance cover, in addition to protection up to €20,000 under the Cyprian Investor Compensation Fund, it makes sense to utilize Trade Republic for the first €50,000 worth of cash deposits and to utilize Trading 212 for the entirety of the excess, assuming you want an instant access account. Reason being, Trading 212 enforces no maximum limit on the Euro cash deposits which qualify for 4.2% interest. So in theory, you could place up to €1 million into qualifying money market funds on Trading 212 and earn 4.2% interest with 100% protection when factoring in the insurance policy. As for Lightyear, due to the competitiveness of Trade Republic and Trading 212, from a deposit perspective, there isn't really much reason to currently utilize it over the alternatives. The interest rate isn't as strong at 3%, and there's no protection under the deposit guarantee scheme, nor any additional private insurance protection either. That by no means makes it unsafe, but it's just a case of stacking up what you get with one platform versus another, and when it comes to additional protections, you'd much rather have it and not need it than need it and not have it. As with all of the platforms mentioned in this video, it is still worthwhile having an account set up and ready to go, just in case that platform becomes a market leader overnight, which can happen. In terms of fixed rate accounts, there's really only one game in town for Irish savers, and that's Raisin Bank. The value of Raisin Bank has only been further emphasized by the recent ECB rate cut. In my last video talking about Raisin Bank, I mentioned that Irish savers would need to start thinking about a world where the likes of Trade Republic and Lightyear were cutting interest rates, and in preparation for that world, opting for a fixed term deposit product with Raisin Bank now in advance of any ECB rate cuts to secure a higher rate of interest for a guaranteed period of time would very likely be a wise decision. This has proven to be true as rate cuts have commenced. Of course, the value of a fixed rate account is that the rate can't be cut for the duration of the fixed term, even if ECB rates fall, but that only applies to consumers who already have a fixed rate account in place. The fixed rates which are advertised to new customers can and will change alongside ECB rates. The problem is that consumers tend to only realize the value of fixed term accounts after it's too late, i.e. when rates have already started to fall. Usually there's a need to be proactive and to get in while fixed rates are still high. But for those still looking to secure a fixed rate on their deposits, it's not too late whatsoever. Raisin Bank has recently introduced some new offerings, including 1 to 5 year accounts with Ariel Bank that offer 3.3% interest per annum with no withholding tax and full protection under the deposit guarantee scheme. Considering Trade Republic is currently at 3.75% after one rate cut, having a guaranteed rate of 3.3% for between 1 to 5 years could be a very attractive option for someone who knows with relative certainty that they won't require the cash for the duration of the fixed rate term. Again, this is in the context of what will likely be multiple ECB rate cuts over the next 12 to 18 months, which will result in lower deposit rates on variable rate accounts like Trade Republic, Lightyear, and the Irish banks. And no, it's not necessary to switch banks in order to use Raisin Bank. You simply transfer money from your current bank account to your Raisin Bank account and allocate that money to whatever Raisin account you're looking to deposit in. So in terms of overall ranking, for instant access accounts, it will be Trade Republic, Republic, then Trading 212, and then Lightyear. And for fixed term accounts, it would be Raisin Bank off on its own. It's also worthwhile mentioning neobanks like Bunq and Revolut. While you're not going to get the best deposit rates on the market, what you are going to get is a tech-enabled and holistic banking solution, which in many ways is superior to the offerings of the Irish banks. Take Bunq for example, as we're all already quite familiar with Revolut. The most comparable offering that Bunq has to the alternatives that we've discussed so far is their free easy savings account. With this account, you get 2.46% interest on deposits up to 100 grand, a fixed deposit rate for 3 months, protection up to 100 grand under the deposit guarantee scheme, and a free virtual credit card. However, the real value of Bunq as a holistic banking and budgeting platform is mainly access through their paid plans, of which there are 3. Easy Bank for $3.99 per month, Easy Bank Pro for $9.99 per month, and Easy Bank Pro XL for $18.99 per month. So the main incentive for setting up a free easy savings account with Bunq is simply to try out the offering for yourself and to see if it's something that you consider using as a permanent banking solution over the likes of AIB, Bank of Ireland, PTSB, and even Revolut. If you take just one thing away from this video, let it be this: there is little to no reason in 2024 to be keeping the vast majority of your deposits with the Irish banks. They offer subpar deposit rates, they charge you high fees, and they offer very basic technology. Non-Irish offerings like Trade Republic, Raisin Bank, Lightyear, Trading 212, and Bunq have proven over the past 18 months in particular to be superior in terms of delivering real value, both monetary and otherwise, to Irish savers who are willing to give them a shot. Maybe you start out with just one. Maybe you try out multiple platforms in conjunction with one another. Regardless of what you do, try not to fall into the trap of sticking solely to the ways of old. Continuously sticking with the Irish banks time and time again will just lead to more of the same deposit rate disappointment that we as Irish savers know all too well. Plus, we know that Irish household savings are on the rise, and if that cash is going to be sitting in a deposit account as opposed to being invested, then you may as well have it in the most competitive deposit account available. Irish savings accounts are changing, so maybe it's time for you to change how you save as well. With that being said, if you do want to try out any or all of the accounts that were mentioned in this video, then you can do so for free by clicking the respective links in the video description and in the pinned comment in the comment section. Let me know what you think are the best accounts for saving money in Ireland right now and which accounts you personally use. If you have any questions on any of the content that was covered in this video, please don't hesitate to leave a comment down below. Thanks very much for watching, and I'll see you in the next one.